What's going on, guys? Welcome back to another video. We have a lot to talk about in this one. The market is absolutely plummeting today. The S&P 500 at the time that I'm recording this right now, which is about 5 minutes before market close, is down about 2.25%, 2.25% right now. There are a lot of things that we need to discuss going into September as we start getting closer to the volatility, obviously, that we're going to see surrounding the election, and then all of the different macroeconomic indicators that we have been paying close attention to. So, guys, without further ado, let's get right into it. And as always, if you guys wouldn't mind going down, hitting that like button on this video here, if you do enjoy these types of videos, it helps spread these videos out to more people here. And again, as I always say, guys, information is the edge, and you guys are going to see exactly why in this video, like we've shown time and time again. So let's first come over here. I mean, I've got the chart of the S&P 500 up right now, but I think everybody understands that the market took a massive dive today. So first thing that I want to talk about here is the seasonal effects of September. Now, for me personally, I'm not the biggest fan of seasonality, just because of every single year and almost every different period in the market being very different macroeconomic effects happening, in different data points that are coming out at any given time. But historically, September is the worst month for stocks, and where we are right now and where we've seen this market be over the last year or so, it does make sense that if everybody thinks that September is going to be one of the worst months of the year, they might try to get out ahead of it, especially after we saw a very, very strong close to August. So that's kind of the first thing there. That's the really most basic element of what we're viewing right now. Now, let's go through a couple of the other data points that we saw today that could be one of the reasons why the market is falling so much. So we did have that manufacturing data that we talked about on stream this morning. Now, when you look at some of these indexes, guys, when you see these numbers here, the reading came in at 47.7 versus the estimates of 48. What you really need to understand about this is two things. One, where is the number coming out versus the expectations? And two, where is it in relation to 50? Above 50 is going to show a little bit of economic expansion, and below 50 is going to show contraction. So we did see the manufacturing data not only come in yet again below that 50 area, but also below market expectations here. So that's another point there. We also, and here's the other thing that was interesting this morning, we did see the bond market starting to move to the upside, which this is going to come in handy and be very, very important in a few minutes here when we really start to talk about the rotation that we are seeing in the market. And again, understanding this information as a whole, where we are in the market, it makes it a lot easier to make much better, well-informed decisions. Oh, and by the way, also, guys, the Discord is live for all of you guys. Everybody gets 2 weeks free. The link will be down below. So if you guys are interested in hopping in there with us, make sure you guys do, because at the end of the month, end of September, it's going to be waitlist only. So coming back over here, we also saw Nvidia just getting absolutely hammered today. Semiconductors as a whole really significantly moving to the downside. I believe SMH was down, at 7% at one point? I mean, AMD's taking a hit over here. SMH right now, the VanEck Semiconductor ETF, down about 7.5%. We did see some news out of China, but also the semiconductor industry, as you guys can see right here, on Tuesday reported below seasonal chip sales for the month of July. And with a significant portion of the market's gains for this year coming from the semiconductor space, when we start to see weakness in those names, obviously the market is going to move down with it. So we've talked about kind of all of the broad market news that we've had right now. Now I want to get into exactly where everybody should be looking in the market right now for potential trade ideas, to make sure that everybody's on the same page here. Because again, if you guys just want to operate willy-nilly in the market thinking that some indicator or some stupid model that you guys see on the internet is going to help you have long-term success, you're mistaken, and I want to make sure that you guys have that information. So let's just think about bond yields right now. There's two things that I want you guys to take a look at. One, we did see a significant move down in bond yields. So remember, bond values and bond yields are inversely correlated. So when yields are moving down, bond prices are moving up, which could suggest a higher demand for these government bonds. Now, what I also want to show you guys is the dollar. Well, what's happening with the dollar today? We are seeing a little bit of a move up. So when you see the dollar increasing, yields moving down, and the overall equity markets significantly moving to the downside, well, you already have a really good argument that the market is moving in a way that they're showing a flight to safety. They're going out of the riskier assets in the equity market and moving into some of these safer assets, bonds. Now, I also want to bring this back up here because this is another key element. The yen significantly strengthened versus the dollar this morning as well. And this is a fear of the market right now, that the yen continues to strengthen, and we continue to see, or we start to see again, that unwind of the yen carry trade, which we then see even more selling of these riskier US assets that a lot of these funds were buying with those loans that they were getting from these Japanese financial institutions, converting that currency into dollars and placing it in US markets. Now, when we think about the market as a whole, guys, and one of the most important things that we have to do as traders, and you guys have seen me do time and time again, is look for sectors that are hot. We do not want to be putting any risk on in sectors that do not look good. Does it make any sense right now to go willy-nilly and start taking massive long positions in the tech sector? Not necessarily. Now, what does look good? Well, we've been talking about utilities a lot, have been looking really good. Real estate, though, has been very, very interesting. It's not that big on this heat map right here, but right above my head, you guys can see there are some decent amount of green real estate tickers. And one of them is this one right here, Realty Income, ticker symbol O. Now, I want you guys to think about what a REIT is, the Real Estate Investment Trust. A lot of the time, they are going to pay a pretty significant and substantial dividend out to its shareholders. Now, think about real estate as a whole right now. We've talked about in the past that it's going to be very difficult for these large real estate institutions to basically rate cut their way out of this vacancy issue that we're seeing in commercial real estate, but rates coming down could easily help some of these companies out. So that furthers our argument that we are seeing a flight to safety. That is exactly what I need everybody to be thinking about right now. Where is the money flowing? And all we have to do is follow where the big money is. This is real trading, guys. Making sure that you have the information and then understanding where to then go and look. We also see healthcare looking relatively good as well here too. UNH had a pretty good day here. J&J, ABBV, and again, a lot of these other household consumer defensive names as well. Walmart, you guys saw that I had those Walmart calls going into today. And again, I was able to scale out of these way up here at, I believe, at about 130%. They ran to a peak of about 150%. And then I ended up cutting the rest of the position after I had already scaled out and made my money back when the position came back to break even. So understanding where the money is flowing is incredibly important. Now, I want to talk broadly about the market here before I kind of wrap things up and send you guys on your way from this evening. So let's pull up ES here. When we look at this chart here, what do we see? Well, we see a giant move up in pretty significant period of consolidation, which is why we have seen across the board a lot of really, really solid setups. But you guys, again, have not seen me get very, very kind of crazy going back in with a lot of these setups yet. Why? Well, we need a reason to trade higher. We're going into an election cycle. We're going into a period where the Fed is going to start cutting interest rates. And historically, when the Fed starts cutting, which we should see at the September FOMC meeting, the market tends to sell off after that. Why? Well, if the Fed has to come out and decrease the federal funds rate and kind of inject or make it easier for capital to flow in an economic system, well, it means that there's something wrong happening. It means that potentially unemployment is moving to the upside. It means that inflation is moving too aggressively to the downside, or growth is slowing. Now, on Friday, guys, we also have a really, really important catalyst that's going to give us more insight into what this rate cut is actually going to be looking like for this September meeting. Personally, I don't think we should be cutting rates by 50 basis points. It doesn't make sense to do that right now. But when we come over here and look at the Fed watch tool. Again, we are seeing these 100 basis point rate cut expectations for the end of the year, not for the September meeting, going through the September, November, and December meeting. Those are starting to pick up again. And even taking away from that 75 basis point area there. And you can also see the argument or the expectations for about 75 basis points of cutting by the end of the year have fallen since Friday. So looking at that right there, guys, that is one of the reasons yields were coming to the downside. Investors are flying into the bond market, trying to lock in these higher yields. We also saw semiconductors moving to the downside, a very, very important element of why the market was trading so much higher this year. But we are also seeing a lot of good opportunity across the board. But we have to make sure, guys, as market participants, you're not going to go through every single day or every single week where things are just going to fire off like crazy and everything is going to work very well. I know that for basically the first 6-7 months of this year, that was the case. But again, that's not going to happen all of the time. We have to make sure that we're keeping our risk in check, making sure that we're behaving smart in the market and understanding the current conditions that we are in. Could this market just rally right back up tomorrow? Absolutely, it could. We are in a period right now where there's going to be money flowing aggressively back and forth, and all we need to do is continue to take solid setups with good risk management and trade them how we normally would, and keeping our risk in check, and never, ever, ever going into the market and saying, oh, this looks good. Since it looks good, we're just going to hope that it continues. Again, if things start to look good and they start to move back in the other direction, we cut it, move to the next one. So team, that's going to wrap it up for this video here. If you guys did enjoy the information and analysis that I provided for you guys, make sure you guys go down, drop a like on this video here. If you have any questions about anything, make sure you guys comment down below. But other than that, I will see you guys in the next one. Peace.